My name is Ernie Badway, and I'd like to welcome everybody to the Thompson Hine Investment Management Coffee Chat webinar series. I am a partner in the Business Litigation and Investment Management practice groups, and I am so happy and pleased to welcome everybody here today to hear from our wonderful and amazing colleagues who have done exemplary work in a new and exciting area. Our session today is part of our ongoing Securities Coffee Chat series, where we attempt to provide a concise, practical discussion on hot topics and trends impacting in the financial services industry. And nothing can be closer to what we're trying to accomplish than what we're going to be talking about today. Today's session is titled Closing Deals in the Digital Asset Space. And we're going to be talking about the complexities and opportunities in these high value transactions in the digital asset space. And in particular, we're going to be talking about something that Thompson Hine just completed a transaction involving a company called SharpLink Gaming, Inc., where we assisted and helped raise over $425 million in a private placement, which was part of both fiat currency, i.e. dollars and the like, as well as Ether, which is part of the Ethereum platform. And we're going to be talking about this today as part of a case study, talking about the structural considerations, the regulatory issues, as well as the evolving role of crypto in capital markets. And I'm going to get back to that in a moment. But I want to introduce our wonderful partner and colleagues in this particular area who really dedicated their lives almost 24/7 for a couple of months when they were dealing with this transaction. And they just did an amazing job. Let me introduce our partner, Faith Charles, who's going to act as the moderator today. Matt Schwartz, one of our senior managing associates, Joe Nunziata, one of our associates, and Alex Ursino, another one of our associates. All of these people were part of the team and an integral part of bringing SharpLink to life in this crypto space. Just some housekeeping matters. Please submit any questions that you have. We want to take those questions. We want to answer them. Please have those questions submitted in the chat box, which is to your right on the screen. And we'll address as many as possible, but I can guarantee you that if we can't get to all the questions today, we will make sure to get back to you and answer those particular questions. Now, before I hand it over to Faith, one of the fascinating things about this particular space is it's ever changing. I know Faith and the team would go to bed at night and then the next morning something would change. For example, in particular, I remember an SEC commissioner who is known as the godmother of the crypto industry, who in the middle of all of this decides to say, wait a second, just because the president and the SEC commissioners are saying that crypto may not be a security, it may actually be a security. So those things had to be dealt with as this process was ongoing. And Faith and the team, Matt and Joe and Alex, did just an amazing job of always trying to, adapt and make sure that the client was protected moving forward. For those who are sort of like new to this particular area, a cryptocurrency treasury strategy is nothing more than a treasury strategy involving digital assets, cryptocurrencies. It's no different than using a fiat currency as a way of managing an asset, except this is in the cryptocurrency space. Our client SharpLink happens to be the largest private holder of Ether in the world, and they are moving along with their strategy, and it provides an alternative investment strategy, an alternative method of exposure to crypto without having to go out and get your own wallet. Now, with that being said, Faith, I'm going to turn it over to you and as the moderator, and go for it.
Thank you. I'm Faith Charles, and I'm a partner in the Capital Markets Group and co-chair of the Securities Group. Let me start by saying that SharpLink is a very exciting client for us. We just started to represent the client in May, and we've done multiple financings for them. So Alex will get into that later, but I just want you to know that since May, and we've done multiple financing. So let's just start with something that Ernie said. You know, why would somebody do a cryptocurrency strategy and somebody invest in it, like all the people that invested, for example, in the pipe for $425 million, rather than just going and buying Ether in the market, right? Because they could go do it off of Coinbase, for example. So I'm going to turn it over to Matt to give us some reasons why you think that somebody would do the strategy and invest in the strategy versus just going out there and buying the crypto.
Thanks, Faith. And this is definitely one of the questions we hear the most because it's the most obvious. It's, why am I investing in a company that's holding an asset when theoretically I could use a platform like Coinbase to purchase the asset directly? And there's really a few reasons for it. First of which is custodial risk. So generally, if you were to hold a cryptocurrency, you hear like horror stories of people losing the code or access to their digital wallet. And unlike fiat currencies, where there's a financial institution backing transactions, oftentimes if you lose access to your key, your assets are gone. If you invest in a crypto strategy company, crypto treasury company, you have people who are professionals handling the asset for you and making sure that all the custodial risk is essentially minimized. So it lets you sleep better at night. Another big reason is essentially the yield on the cryptocurrency. Just as an asset manager, put your money to work and yield some sort of return or interest on your investment. There's a similar strategy used for cryptocurrencies. And so it's specific to the currency, but in essence, they do something called staking or putting the cryptocurrency to work. And as a result, they receive back additional currency. And you can kind of just think about this almost as receiving interest on your cryptocurrency. So if you invest through a cryptocurrency strategy, through a treasury, you have experts, you have asset managers essentially figuring out the ways to best create a return on your assets in a way that you would not be able to do yourself should you just hold the asset directly. And the third, and probably the most convincing reason, is essentially liquidity and accessibility. As much as platforms like Coinbase are allowing investors to buy coins directly or cryptocurrencies directly, nothing is more liquid than holding a publicly traded company on a national exchange. It makes life easy. It's transparent. You can get in and out of it instantly, essentially. So in essence, by investing in a cryptocurrency strategy company, treasury company, you end up with a greater yield on the underlying asset. You have more accessibility, and you avoid some of the custodial risks that have really come to bite some people in the past.
Thanks, Matt. I'm going to ask Joe a question now, and this is always an interesting question, and we have some clients coming to us and they're saying, should we do a cryptocurrency strategy? What does that mean? Why would we do it? What type of company typically does it? So I'm going to ask Joe to speak a little bit about some considerations when, if let's say you're a company, for example, like SharpLink that was in gaming or affiliate marketing, why they ended up doing this.
Thank you, Faith. First of all, pleasure meeting everyone. I'm Joe. I'm an associate of Faith's in the New York office, as Ernie said. So we do get this question a lot. I think it's threefold. The first and most important probably being that you need a clean cap table. You might be wondering how clean, and we've told clients that getting rid of all your debt, Warrants, preferred notes is of utmost importance when it comes to cleaning that cap table. Investors do not want to invest in a company where some of their funds are going to go towards any existing debt of the company. They want all of that to go towards purchasing the underlying asset, which is the purpose of the crypto strategy. You can imagine if you're going to invest in a company and part of your investment has to go towards house cleaning, as we call it, you might not be so interested in the company. So that's probably one of the most important ones that we tell companies, and we have seen a lot of companies get turned away for stuff like that, or banks even just talking to them in general, not be interested. The second is that there needs to be a strong operating a business for the company. In general, a positive net cash operating business is something that should be emphasized when it comes to the company that you're pushing forward. Again, this is something that investors are looking to invest in. The company itself needs to be strong. I'm not saying you need to have some amazing company that's generating millions and millions of dollars, but just a general company that it looks like management knows what they're doing and that the underlying assets, business are strong enough that investors are going to be confident in giving you their money. And then finally, I would emphasize this one the most as well, just because of what we went through with SharpLink and all the work, and that is you want to have a management team that is both open to learning what they don't know, which is something that we always emphasize with clients, and what they do know, and that is, operating a business, carrying on the business. Once this strategy starts, it's all steam ahead. It's a lot of work. SharpLink has a very strong management team, and that's why they've been so good post-deal. But leaning on your strategic advisor in these type of deals is so important. Listening to them, taking their advice, carrying you through the crypto strategy that perhaps you might not be as knowledgeable in that space as a strategic advisor is so important. So summarizing all those three, we cannot emphasize them enough. If you're a bank looking at companies to do this with, if you're the company itself, take a look inward and think about those three when you're thinking about a crypto strategy.
Thank you, Joe. So I'm going to turn it over now to Alex. And my question for you is, Alex, a company is going to engage in this strategy, and they're going to need to figure out what do they need to engage in the strategy. And when I talk about it, it's not a company that wants to take a couple of $1 million and invest it themselves. It's really someone that wants to do a whole big strategy. So I want to turn it over to you and let the audience know all the different parties that you need to think about when a company is looking to do this strategy.
Right. So there are a lot of different parties. It's not just a traditional pipe, right? In the sense that there's the placement agent, the company, and the investors. There are a lot of other stakeholders when it comes to deals like this. And we'll just break it down into each individual stakeholder in this instance. So first, of course, is the investment bank would be acting as placement agent, underwriter. It depends on the deal. In our case, they acted as a placement agent, given it was a pipe. And it's the same considerations with selecting any investment bank. You're looking at their track record. Can they get you in front of the right investors? And you also want to know what their track record exactly is and their knowledge of industry investors. So you don't want to look for a bank that's just going to piggyback off of your strategic advisor, which we'll get to in a second. And in SharpLink's case, they had a previous relationship with AGP. They had implemented an ATM with them the year prior. So there was already like a relationship there. And they had just done a best efforts offering with them to cure their NASDAQ deficiency. So they knew they could trust them. They knew there was an important track record. And AGP had a track record in the sense that they had just done a treasury strategy for Soluna with Upexi. So they had that track record as well. And they were able to present, what they knew, what they went through in terms of all the different considerations with SEC, NASDAQ, 40 Act, all these things that we'll get into a little bit later. So that was, step one. Then there's the strategic advisor, and this is essentially the crypto expert, and they're like ideally the lead investor. So in this case, it was Consensus for SharpLink, and they're essential to setting up the strategy and all the day-to-day operations once the treasury strategy is actually implemented. So the strategic advisor ideally should have contacts in the industry, ready to negotiate on behalf of the company, and they should like be a strong name in the industry, because that's essential for fundraising, right? The stronger name that you have backing an investment like this, the better the deal will likely be. So for SharpLink, it was Consensus, like I said, and for those of you unaware, Consensus is founded by Joe Lubin, who is a co-founder of Ethereum. Again, SharpLink is an Ethereum treasury strategy. So anything that had his name on it was going to give it a vote of confidence. So that's the strategic advisor. And then the asset manager, there can be more than one asset manager. Again, SharpLink, it's two. It's Parify and Galaxy. You again want a track record. Both Parify and Galaxy had track records of being asset managers. And the strategic advisor essentially helps the company negotiate the terms of the asset management agreements. And again, strong names in the industry. And then the investors, a large anchor is very helpful. And you're looking for fundamental investors, as with any new industry. And, I think the best way to break up the deal is essentially the traditional pipe in the beginning, and then everything that comes with implementing the treasury strategy afterwards, right? So you price the pipe, and then the next few days after that during closing are, okay, negotiating the asset management agreement, negotiating the strategic advisor agreement, and making sure that, if there's any issues with, the board and NASDAQ control, you're all figuring that out at the same time and everyone's working together. And so not only do these people have to be knowledgeable about everything, you have to be willing to work together with them. And, as everyone has kind of alluded to several times, it's lots of long nights. It's not, easy, but the, more you talk to everyone and the more everyone gets involved, the better outcome it becomes. And, like we said, the investors are important, and SharpLink had over 100 investors. And that was all part of, Consensus, their big name, AGP in the previous treasury strategy deal that they had implemented. And so those were all the different stakeholders and, how the deal kind of transpired.
Thank you, Alex. So it's all very interesting, and it seems like, a lot of companies are doing it now. So the interesting part about it is it's not an easy process, and you usually start the process way before you do the pipe, for example, because you need to have everything lined up properly. It's not like you can get all these pieces together overnight. So it's a very thoughtful process if you want to do it the correct way. So I'm going to turn to Matt to talk about some of the unique challenges, and we're going to be breaking this up with different people, but to talk about some of the unique challenges that we faced when we were hired basically to represent SharpLink and to work on the pipe, for example.
Thanks, Faith. And before getting into that, I just want to reiterate exactly what Faith said. A lot goes on in the background of these transactions, even before they're announced publicly. So even though, some people do view them as, it's a treasury strategy, it's a purchase and hold strategy, we can transfer into this. There is a lot that goes into it. Remember, every party that Alex just mentioned has their own interests. So whether it's the bank, the strategic advisor, the asset manager, they each have their own interests, and they're each going to negotiate their part of the transaction, very heavily. None of this is standardized, especially at this point. So you do have to build in a long period of time and understand that every agreement, every cog in this puzzle is going to take time, and you're going to hit some sort of roadblock with it. But moving on to some of the challenges that we found, I'm going to talk a little bit about the regulatory side, which obviously falls mostly on us as attorneys and everybody else to have to deal with us talking about it. But nonetheless, one of the first big issues we have is 1940 Act investment company compliance. So in order to avoid being considered a investment company and being subject to a large amount of regulation, we have to ensure that whatever the asset being purchased by the company is not considered a security. Without going into too much detail, there is an analysis done on whatever the underlying asset is as to whether or not it's a security. For the most part, the important thing is to remember you have to be dealing with a cryptocurrency that your attorneys are comfortable with evaluating and determining is not a security. They're going to be able to opine on that. But as Ernie also mentioned at the very beginning, this goes back and forth as to what the SEC considers to be a security and doesn't. So you have to choose something that you consider to not be a security. You get an opinion on that, but you also have to have ample disclosure that things could change. Should the SEC or any government agency take a different position, you might have to pivot, and without much notice, you could essentially run into issues with becoming a 40 Act investment company. The next concern are broker-dealer concerns. In essence, you cannot buy or sell securities if you're not a registered broker-dealer on the simplest level. The banks are able to do that, and that's their role in these transactions. We do see some transactions where their sort of lines are blurred a little bit, where a strategic advisor might be viewed as their consideration being in part for bringing in investors. You have to make clear cut that that's not the role of a strategic advisor. Their role is to advise the company, and there's plenty of business to be done that they need advice on. So their expertise in the crypto area is what they're being compensated for, and their compensation should reflect that. So, for example, like in SharpLink, if you're going to have compensation as warrants, you set the strike price higher than the deal price. This is not compensation for bringing investors in. This is compensation for helping the company grow. Another issue we see are change of control concerns. And this ties back to our discussion about having a strong underlying business and continuing that business. If the exchange, if the national exchange looks at the company and says, this isn't just adding a business line or some sort of shift in the focus, and says this is a new business, it creates all sorts of regulatory problems because they're going to reevaluate the company and their ability to list on the exchange. SharpLink is still operating its business as it was before, and it plans to continue to do it. Its name is still SharpLink Gaming. It isn't changing its name. It's not changing its ticker. It is still the same company. It now has an additional operation. So going back to having a strong operating company and a strong set of management, you need to make sure that after whatever transaction you do to raise capital for the new treasury strategy, underlying business continues. If anybody questions it, you're able to show that it's continuing. And as Alex mentioned, hopefully it's cash positive so that investors aren't viewing their investment in the treasury strategy as supplementing and keeping alive some sort of business that's hemorrhaging cash. So that's more or less what we're seeing on the regulatory side as far as challenges for these structured transactions.
Thank you.
But
So, sorry.
If I could just jump in for a second, just
Sure.
to fine point on it, the regulations are changing every day. The SEC has its roundtable on digital assets. They keep saying there's going to be greater regulation. Just to put a fine point on what Alex and Matt have said, it's really every day we wake up could be a change.
Okay, thank you, Ernie. So Alex, we wake up to SharpLink, we go to sleep to SharpLink. So after we did the pipe for example, what are some of the things that the company does on a day-to-day basis and that they need to consider once they've taken in this strategy or they implemented the strategy?
Sure. So just understanding the complexity of this transaction and the new business. How are you buying the cryptocurrency? Do you have a wallet? Do you understand how the wallet works? Also, you have these agreements set in place with the asset managers, but I think there's two parts to it as well. Who's going to be telling the asset managers when and how to buy the crypto? What officers have that delegation and that ability to do that? Additionally, ETH, you can purchase ETH 24/7. It's not like a traditional market, right? It's not like NASDAQ that's, open during the week and, trading normal trading hours. It's 24/7. So again, who are the officers and what are the procedures that are going to be in place for and with the asset managers? So that's one of the things that, day one, what you need to find out. Are the auditors equipped to handle the new business? So not every auditor knows or wants to be involved with companies that are involved in crypto. SharpLink is actually particularly interesting because not only do they have this crypto treasury strategy, they also are in sports betting, which are two industries that people are kind of, afraid of in a sense, right? Because of the ever-changing like regulatory issues and things like that. Also, is your internal accounting equipped to handle the new business, right? Do the financial analysts, do the CFO, does everyone understand what exactly you're doing, how it's valued? And if they don't know, are they willing to learn and sit down with the auditors and sit down with the attorneys and everyone involved? And which is such an incredible part about, SharpLink is how intelligent everyone in that company is and how, while these questions are there, they're pretty much answered as we're, asking them. And then again, like just keeping the old business going. You have to not only worry about NASDAQ control issues, but you also just want to keep the old business running as well, right? SharpLink was a successful company in their affiliate marketing business and in their sports betting, iGaming business. And that can't just be pushed to the side. And, there are other employees who specifically focused on that. So it's, about making sure the new operating business is successful, but also making sure that the old operating business is continuing to have success as well and getting the appropriate amount of time and attention that is, needed.
Okay, and what are some of the issues that we see on a day-to-day basis? Some of the questions that come up on a day-to-day basis when the client calls, what are they asking about?
Yeah, so there are a lot of day-to-day issues that, we deal with all the time. One of the biggest ones is actually social media. So there's two parts to it, right? Joe Lubin, again, he's, very well known in the crypto space, and he has known to be very vocal on, X. He does podcasts regularly. He goes on TV speaking about Ether, and it's important to, discuss with him now his role as the chairman of the board of a public company, what he can and cannot say. There's also the part of, there's a Twitter that, when we first started representing SharpLink had maybe 200 followers. I think now they're up to like tens of thousands of followers. And, everyone knows social media and the people who are working on the social media are trying to drive engagement. But there's a difference between driving engagement and, stepping across the line and, insinuating something about the company, making sure there's no MNPI that people are mentioning or insinuating anything is going to happen. We frequently have to look at memes that are getting posted, by the company on X. So that's one part of the job that, has been interesting and a day-to-day issue that consistently comes up. Also, the compensation of directors and officers. Again, this company was successful prior to, but now they're, gotten to the stratosphere about how successful they are. And rightfully so, all the hard work that the directors and officers and other employees have put into this transaction. You want to make sure that they're compensated correctly and fairly. So that's also something that we deal with day to day. And then the point of the treasury strategy is to, buy ETH. And to buy ETH, you need money. So you have to worry about, where the company is going to find that money and financing. So for example, we put up a $1 billion ATM pretty shortly thereafter the PIPE. And recently we put up a $5 billion ATM for the company to use and raise money to, again, buy ETH. Tracking and reporting the crypto purchases. So every week we put out a PR announcing, how much ETH the company has, how much of the total staking rewards there are, how many shares they've sold pursuant to the ATM facility, and how much money they've raised. And you just want to make sure that all the information disclosed in the PR and the 8K is accurate. And again, we do that weekly. And then you're also just updating the company's charters and policies, making sure that they're updated and appropriate for the company size as they continue to grow. And that includes, of course, the social media, OFAC, the treasury strategy policy, of course, but even going back and, reviewing previous policies like compensation and audit. So those are some of the day-to-day, issues that come up. And as Faith said, it's wake up and it's SharpLink and you go to bed at SharpLink. So it's been very interesting.
So let's go back to the deal, the PIPE, right? We can always talk about the ATMs that we've done since, and we could talk about implementing those. But at the time of the PIPE, we also had to promise that we would do a resale registration. So Joe, why don't you talk a little bit about the complexities of having to get that resale registration done, and then the results of getting of doing the PIPE as far as the company, and it's still a small reporting company, but it's now called the WIXI. So why don't you talk a little bit about that, because people need to know the complexities of the resale registration as well.
Yeah, of course. The resale registration statement, for those that don't know, is essentially a registration statement registering the shares from the private placement. Pretty self-explanatory. We were thinking about the resale before the PIPE even closed. We had drafts going internally, drafts with the company. And the reason being is once the private placement was announced, the stock jumped. I mean, it was at lows of probably $6 or something like that. You guys might know better than me. And then it hit highs of probably $79 to $80, and I might even be understating that. That was in a matter of a few days. So you can imagine investors that invested in this deal are immediately ready to get out of their positions, or small positions, but they can't sell because those shares are privately held, and they can't sell on the market. So they're expecting us to get a resale registration statement up. We had an obligation, I believe, within 15 days of closing. We beat that by a large margin, simply because of the requests we were getting. So I say all that to say that right after the deal goes through, the assets are obviously high. The price was astronomical. Liquidity is low because obviously all the shares are privately held, and investors are looking to get out quick. So what I would emphasize is talk ahead of before you execute the private placement, talk ahead with your bank, talk ahead with the company. If you're legal counsel, from the company's side, talk with the bank. Make sure that investors understand the complexities of the resale, how it might take a little time to get up, the research that needs to go into it, and how you're going to file it. As Faith said, we did some WIXI research, which essentially is boiled down to is if your public float is above 700 million, which we had beat at the time. And so we had to do all this research to ensure that we complied with WIXI filings, which essentially, in another phrase, is saying we can put up an S3 and we can immediately sell off it, whereas small reporting companies cannot. So it's an added benefit towards those companies. But going back to the banks, having the banks communicate with investors, and on the other end, companies communicating with investors to send out what we call selling shareholder questionnaires, ensuring we have accurate information on their holdings, and ensuring it's a fair and transparent process, meaning that investors know when the resale is going up, they know how many shares they hold, they know that that's going to be accurately reflected on the resale so that they can appropriately make decisions on what they want to do with those shares once it's up. So I would emphasize that process, and that goes into many other things that are involved with the pipe. You just want to make sure your legal counsel, your company, and your bank are all on the same page to push forward every single thing that comes after the pipe immediately, but also efficiently.
So now I'm just going to turn to each person, including you, Ernie, and ask tell the audience something that you found unique to the SharpLink transaction and that you would want them to know if they want to adopt a crypto strategy. So Alex, I'm going to ask you first.
Sure. I think that like any additional advice and anything like that, I would just say that there's a lot of steps that need to be taken. I mean, we've talked about them. It's not just, okay, we're going to raise a bunch of money and now we're going to implement this strategy and hopefully the, company becomes successful. It's a lot more in depth than that. It's a lot more involved than that. And the more successful the transaction is, the more, scrutiny the deal will get, and the more, scrutiny everything that you file and everything you do will get. Anytime our PRs are sent out saying how much ETH we have purchased, it's all over, crypto Twitter, and there's discussions about that. It was interesting because we had a special meeting last week to increase our authorized shares. And there were forums on Twitter discussing how people thought the shareholder vote was going to go and, what would that mean for the company? It's a lot of, again, scrutiny, and you're in the public eye more, and it's something to, consider. It's not just that we're going to raise a bunch of money and, quietly back away. It's, you have to be committed to what you're doing. And, that's, I think, something that I think people might not understand.
So Alex, I'm just going to add one thing to what Alex said about the shareholder meeting. It prompted me to think about that. When you're doing one of these deals, you really need to think, do you have enough authorized common stock or ordinary shares, I guess, either way, to do the deal? Because we ran out of authorized shares. So we immediately, another thing we had to do right afterwards was prepare a proxy for the increase of the authorized shares. And that takes time. And there were issues that we had because we didn't have enough shares. So you have to really think about that. Look at your charter, see if you need to do it. Maybe even if you think you're going to do this, you may even want to start preparing a proxy now, because that is problematic when you really want to sell shares, especially if you're using an ATM and you have a lot of volume and you could sell the shares and all of a sudden you realize, wait, we have no more shares to sell. So we had to come up with a lot of creative ideas how to get shares to sell. That was another thing that we spent a lot of time on. Matt, can you say something? You're on mute.
I guess the big takeaway is that I still don't know how to use Zoom, but beyond that, I think the big takeaway from the transaction and being in this space generally is how important a basic understanding of what the business is doing and how to value it based on that is, to whether it's, bringing in investors or just being able to talk intelligently about what you're doing. In essence, these companies, they're holding assets. These assets are going to appreciate in value. They appreciate the same way that you would get interest on holding cash or something like that. They appreciate because you have people that know what they're doing, handling it, managing it, and making it grow. You have more safety in holding it through a treasury strategy. And these different aspects add value to the company. So if the underlying value of whatever the cryptocurrency is, say 1 or 1x for whatever, for this sample, maybe the value added of the increased equivalent of interest you're going to get, the increased safety you're going to get, the increased liquidity you get is another 50%. and you're then trading at 1.5 times the value of your underlying assets. The company is doing well at this point and demonstrating its value. And don't be off put by the period of time between doing a PIPE and registering for resale all the securities. Because at that point, the company has taken in a large amount of capital, but doesn't yet have the liquidity. So you might see stock fluctuate greatly. But understand when it comes back down, when it's trading above the value of the assets it's holding, that's demonstrating the company's value. And the second big thing I think I took away from it is understanding when you're doing additional capital raises, unlike in many other industries, dilution should be viewed differently because all the money coming in is going towards purchasing more underlying assets. So the net asset value of the company is going to increase more or less proportionately to the money that comes in. So it's not like there's a burn rate to look at and dilution to look at and some disappointment every time additional money comes in because it's really going towards the same underlying asset.
Yeah, that's an important
Big
point,
takeaways.
Matt, which a lot of people don't realize. And you'll see that also on X. There's a lot of comments about that as well. Joe,
Yeah,
anything
sure.
you want to say?
I would emphasize the underlying crypto that you pick. Ethereum was such a strong crypto for this company. If you've followed Ethereum lately, it's shot up. It's been a really strong crypto. It's one of the best. So I would emphasize, if you're doing this strategy, maybe think about doing one that people have done in the past, as opposed to picking a random crypto that maybe no one's heard about or that's small or that is not as popular in the space. I think it goes a long way. It shows investors that you have strong backing. And I think it does go a long way in not only the public sphere, but your personal, your business itself, your operating business. So I would emphasize the underlying crypto.
That's a very excellent point. So I'm going to turn it over to Ernie to give some of his thoughts and also close out the session. But I want to really thank everyone for attending. And if you have any questions, you can call any one of us and we'll be happy to answer any questions that you have. Ernie?
Thanks, Faith. And look, Faith, Matt, Joe, Alex, just the amazing work you did on SharpLink. And as you said, you wake up every morning, you go to sleep with SharpLink and you wake up every morning with it. And that's going to continue. And we see that happening in the future with other companies as well, too, who want to come forward in this. I do want to pick up on just one point that all of you mentioned. And what's fascinating to me in this particular space is the more things change, the more they stay the same. And you all mentioned it, in different ways, people, management, etc. There's that people component, that human component, which is critical. And of course, with SharpLink, its new CEO and consensus, its relationship with that, and the co-founder of Ethereum and everything, just fascinating to me. And I think really, when you focus in on some things like that, I think it's really critical to know. Now, this being a new space and everything, I do want to tell one thing, because as Faith and Matt and Alex and Joe know, I'm kind of like the no. Like, a lot of times when people come to me, I have to say no, because it comes from a long history of reading indictments by the Department of Justice, the various states, and of course, SEC complaints. And they always love to begin with, saying the so-and-so person who was in charge of this company, used to sell ice cream. True story. Used to park cars at a hotel, And one of the things that you'll see with the people aspect of this is that people did other things before they got into the digital asset space. And what I'm trying to suggest is that's not necessarily a reason to throw the baby out with the bathwater, but it is certainly something that we should all look at and make sure that those people who are now involved in this are able to function in a public space. I also want to point out something else too, and that is Faith, Matt, Joe, and Alex, their bios are on the Thompson Hine website, thompsonhine.com. You can contact them directly. Their phone numbers and emails are there. Please do so if you have any questions. And we're going to conclude our coffee chat today. And I want to thank, on behalf of Thompson Hine and our panelists, for joining us. It's been an incredible, informative discussion. And please join us for our future coffee chats. We're going to be sending out it in your inbox. You'll see the invitations. And our next coffee chat is scheduled for August 12th, where we'll continue our digital asset discussion, including involving some people on this panel right now. It's called The Evolving World of Digital Assets, Bitcoin, Spot Bitcoin, ETFs, and Tokenized Securities. We would love to have you there. Invite your friends and family. And once again, Faith, Matt, Joe, Alex, thank you so much for this incredible talk. And please reach out to them and talk with them. Thanks again for attending, and enjoy the rest of your day.